Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. After yesterday's Manic Monday action on the D Street, we are seeing some rebound take place on the markets today, and we have had a gap up start in the trade today, and this is on the back of comments made by US President Donald Trump last night, where he indicated that the Iran-US-Israel war is very much ahead of the schedule of completing at this point in time. It's very much complete is what he has indicated in his statements to a broadcaster in the US as well. What these statements have really led to is improving in this sentiments as far as the commodity market is concerned. The crude oil prices therefore rebounded sharply in trade. We are now seeing the crude oil prices once again slip below the $90 a barrel mark. Similarly, we've seen the global markets react positively. Wall Street of course reacting positively to these statements. Asia markets opening positively, and therefore the Indian markets also opened above 24,100 mark as well. And right now you are looking at about a 0.4% uptick on the markets as well. Barring IT and oil and gas, those are the only sectors that are hovering into the red, just about an hour from opening in trade. And we have autos now driving from the front lane. Remember, autos were the biggest losers in trade yesterday. There's a sharp rebound there. You have financial services, small caps, pharma stocks, banking stocks also moving up in trade yet again. When we look at the top gainers on the Nifty, you will find a list of stocks from the auto basket. Indigo is also rebounding about 3.5% from the crude sensitive sectors. Look at Shriram Finance, that's up, Ultratech Cement, Mahindra & Mahindra, Dr. Reddy's, Tata Motors. These are all the stocks that are hovering higher in trade. Yet at the same time, today the clear focus is coming in onto the LPG and the sectors that are getting impacted, because India's food services sector is looking at facing disruption due to a shortage of commercial LPG cylinders as well. This is probably risking the shutdown of restaurants. Also, there is a wider risk of an impact that is being seen on the food delivery giants like Eternal and Swiggy as well. We are going to be trying to understand what really the situation is at this point in time, and of course trying to understand what are hotels, restaurant operators at this point in time really looking at the current situation that is being evolved. Remember, the ministry has already indicated the oil marketing companies, IOC, BPCL, HPCL, to now first cater to the requirements made by educational institutions and hospitals, and thereby reduce or completely halt their services to the commercial operations at this point in time, the non-domestic, the non-homebound LPG needs at this point in time. And therefore that has brought the entire quick service restaurant chains, the hotel oriented stocks, the food delivery giants, the entire food sector in focus at this point in time as well. Let's actually welcome our special guest on board. Mr. Amit Jaiswal, the CFO of Royal Orchid, is joining in to share with us his views on what exactly is the current situation evolving like. Warm welcome to you. Thank you so much for taking the time out, Amit ji, and good to have you with us. But do help us understand, how are you reading into the current situation? And do help us understand, does it impact even hotel operations, the restaurants at the hotels at this point in time too?
The question is very serious, to be very frank. Since yesterday, we all have been, planning and thinking what will happen if we don't have the supply of the, LPG. See, the main source of, cooking is the LPG. In today's time, all the restaurants, hotels, and even all the eateries. Okay, and you said Swiggy and Zomato, they don't cook. It's the restaurant and the eateries who cook for them. So they may be giant, but their dependency
No, they are getting impacted, sir. They're getting impacted because a lot of restaurants are saying that we will not supply to you the kind of orders that they were used to of getting from restaurants. They will not be able to fulfill the orders, and therefore they might look at a volume decline, and that's why they're getting impacted. That's what I said.
Absolutely, 100% you are right that ultimately the supply is done by the restaurant and the eateries. Okay. Today, a restaurant may close down. Okay, I can understand that there is no LPG, a restaurant closes down, or a eatery may close down its operation. What will the hotelier do? I have got, suppose in my Bangalore hotel, 200 rooms. I have got in-house at least 350 people staying in my hotel. What do I do with them? That's a bigger question.
Correct,
It's
correct.
we should not look it at as a point of sale or making money or a commercial transaction. Even hotels, I personally feel that it is a necessity. It cannot be termed as a luxury or okay, we will
Correct.
see. So I have 350 people staying in my hotel now in one hotel. So like we are operating 120 hotel across India. So you can imagine 10,000 rooms, almost 15,000 people are staying with me every day. What do I do with them? They need food. Where do
Correct.
I go? So that's a very serious question. And in fact, we had sleepless night yesterday that how do we, right now we are having stock of maybe a couple of days we may manage. But after that? What will happen after that? It's a big question.
So what is the supply? Can we understand a little bit? That's how you clearly pointed out it's a serious situation at this point in time, especially for hotel operators like yours who cater to 15,000 people on an average every day basis as well across the list of your 100 plus hotels. At this point in time, the key concern for you across those band of hotels is how do you service the food needs for all those people staying at your hotels. So give us an understanding of what is the usual, the kind of stockpile of LPG that you usually keep, and of course in this current situation, how many days would you be able to sustain without any troubles?
See, in every hotel we have a gas bank where we keep the cylinders, okay, and that will be around 30 to 35 cylinders at any point of time we keep,
Okay.
which we can use for at least 3 days. 3 days of consumption, 3 to 4 days, depending on the F&B outlet and the banqueting. 3 to 4 days we can manage. Now, one day is already gone. Maybe another 2 days, 2.5 days we will be able to manage. The dealers who supply the gas, they have raised their hand. They said that we don't have the supply. What do I do? So we are at this position today. I don't know. How do
So,
we do?
right. So, have you had any communication so far with the government at this point in time? What is the kind of communication has gone from the hotel, representatives to the government? What we are hearing so far is that ministry is already reviewing some of the requests that have come in from the hotel side. What are you hearing, sir?
See, our association has made an appeal to the government that you cannot stop the supply of this commercial gas. Okay, we understand you scale it down little bit and also that we use the gases little, in an more and more efficient way. But if you stop the supply, which has already happened since yesterday, there is no supply, which means that it's a crisis situation. It's not so easy situation. See, in
Correct.
every household, there is one cylinder which goes for a month. But in commercial use, it's high. So today we are having a crisis meeting, and we'll have to find out the further course of action.
Absolutely, sir. Do help us understand, are you going to be taking some measures at this point in time to look at the current situation? Maybe close your restaurants for outside, people to come in and consume food so that you at least cater to your in-house residents in your, hotels at this point. Are you taking some measures, severe measures like that?
No, that's what today we will have crisis meeting and we will evaluate what kind of supply and how do we manage. We'll move to some electrical appliances. Maybe we'll move to coal, charcoal and tandoor and all. So all those planning we need to do because see, we can't close down the hotel, you know. So we will try to scale it down our F&B services.
Okay.
But let's see, it's a very difficult situation, right?
It is a difficult situation at this point in time, and you are going to be having a meeting at this point in time as well. What do you think is the need of the hour, for hotel operators like yours, to look at the current situation, and what is the best sort of options available at your hand, sir?
See, right now we can move to electrical cooking to a great extent, but electrical cooking cannot be done for huge numbers.
Everything.
For smaller numbers we can do. So we will move to tandoor or charcoal and all. But these all will be stopgap arrangement. Ultimately, if the government is not able to reinstate the services and reinstate the supplies in 7 or 10 days, then I think we don't know how do we manage.
Amitji, stay on with us. I'm actually now getting some fresh information from my, colleague who's joining in, Aishwarya Patil, who's been tracking this story very closely since yesterday and giving us all those updates. Aishwarya, give us an understanding. We are hearing from the industry experts. So we have Amitji from Royal Orchid Hotels. He says that this is a crisis situation. Of course, he's looking at, shifting a large part of his cooking to electric and to tandoor for right now. There is a crisis situation. This has not happened before. Since yesterday, there's been no supply of LPG at his hotels. 100 plus hotels, about 15,000 people staying at those hotels will be needing food, and that's what is at risk. What is it that you're getting to hear from the ministry? What is the current situation?
Well, so far since last week, government officials, in fact, some of the top officials, one of our sources have also mentioned that we are in a comfortable position, but the stance has changed slightly since last night. In fact, the ministry, as you have seen, they have tweeted out saying that there is a crisis, but we are looking at reprioritizing our needs at this point in time, at least for India. Domestic usage is a priority, household cooking gas is a priority, and so that is all of the LPG production at this point. The government has mandated all of these oil and gas companies like IOCL, BPCL, HPCL, who do provide us with some of this cooking gas, have been diverting all of their production towards household LPG supply only at this point in time. So that was the government mandate. As far as some of the industry sources, what they are suggesting is that there is an issue with the distribution level, as I heard him, as I heard Sir mentioning as well. So that's an issue at this point. There is a shortage at the distribution level, but oil and gas companies, oil marketing companies at this point are saying there is no issue from the supply side as far as OMCs are concerned. But as we see across India right now, Maharashtra, we've seen, restaurant associations from Coimbatore, Karnataka, all of them flagging that at least there is, in some places there is a shortage, in some places there is a longer waiting period. So what must be noted is that even for household domestic waiting periods also, that has been increased to about 25 days now. Earlier it was fewer number of days that your gas cylinder would be delivered to you. So it is a crisis at this point, and we've seen that happening on ground at some of these enterprises. Hospitality, restaurants, and even quick delivery has been impacted as a result of that. So that's the update so far. Around 2:30 p.m. we will be able to get you some more updates from a few of the sources in the government as well going forward from here.
All right, Aishwarya, keep an eye out on that. Amit ji, give us an understanding, at your hotels, for how many days are you sufficiently able to, service your, the people staying at your hotels without any trouble at this point in time? With the, you did talk about 35 cylinders usually are kept as buffers. So how many days will it be able to suffice the current needs?
I personally feel 3 days we should be able to suffice. After that, it's a crisis situation.
So within 3 days, any which ways we are hoping. Okay. Yeah, please go on.
And
please.
One more point I want to tell you through your channel, that in a country like ours and cities like Bangalore, Pune, Gurgaon and all, crores of bachelors are staying, and they are heavily dependent on outside food, cafeteria food in the offices and outside food. They are heavily dependent. I think they will be put to a huge, issue going forward if the situation doesn't improve.
Okay, thank you so much, Amit ji. We will of course get more details at around afternoon. Therefore, after that, we will again touch base with you and try to understand what has happened at your meeting as well, to give us more insights as to what is the outlook looking like at this point in time. But, hopefully the situation improves for the better. All the very best to you. Thank you so much for taking the time out for explaining the current situation to us. So, viewers, you did hear from the management of Royal Orchid, as they're saying that 3 more days is what the buffer is across their hotels. But beyond that, if the situation worsens, it could be a trouble for hotel majors like Royal Orchid. Let's actually now welcome our market expert on the program. We have Mr. Abhishek Basu Malik joining in from Sri Rama PMS to help us understand the current situation and what to do, when it comes to the retail investors approach in case you are heavy on the food sector, the QSR chains, the food delivery giants. If you have these kind of stocks in your portfolio, you might be able to see some knee-jerk reactions negatively, but is it any kind of a concern at this point in time is what we will try to understand. Warm welcome to you, Abhishek ji. Good to have you with us. We started off by understanding the issue at hand. Yesterday it was all about crude oil. Today the crude oil is ebbing lower, but it's more about LPG and how the commercial sector is facing the shortage of LPG at this point in time. The Restaurants Association has already indicated there are many closures that are already taking place for those places which did not have any buffers. For hotel chains that do have some buffer, next 2 to 3 days will be okay, but beyond that it could be a serious issue across the board. What is your understanding of what's happening with the LPG situation, and how should you be really approaching oil and gas sector, restaurant sector at this point, sir?
So, good morning to you and all your viewers. See, I cannot claim that I am an expert on oil and gas and LPG inventory. Very difficult to call these things because these are cases where the government is going to do something. They're already in talks with different providers. Indian companies have been asked to sort of produce more. So very, very dynamic situation. It's like yesterday was with oil. By the end of the day, things were slightly different. Today, the discussion is around LPG. Again, by the end of the day, a lot of these things could have sort of been addressed at least to an extent. So very difficult to actually call out what is happening. But I think, we need to sort of take a deep breath and let things be. I'm not sure if the situation is as dire as is being made out to be.
Okay.
We'll see. I mean, we've actually seen much worse, overall situations. We've been through a pandemic. We've been through a lot of ups and downs. It's not the first time we've seen an oil shock. So it takes maybe a couple of days for things to sort of get normalized. I would not be overly concerned as long as this war sort of does not continue for a very long period of time. And my guess is even if it does, there is going to be a lot. There is going to be a lot of intervention because it's not a localized problem. It's not that only India is not going to get LPG. It's then going to be a global problem.
Right. Just to understand, what should be the approach? Sectors like, food, QSR, food delivery platforms, they would have hardly penciled in any impact of the ongoing war on themselves, on their immediate business. But this is coming out of the blue when LPG disruption has happened on the country level, and therefore the step taken by the ministry to cater only to frontline sectors like education or maybe hospitals at this point in time, reduce the commercial cylinders and only domestic ones to continue uninterrupted services. Of course, bigger hotel chains may have like a lot of buffer, but it's the smaller QSR restaurants that might get affected, and the food delivery giants which are dependent on everyday volume circular. Now what happens is when these restaurants close or when these restaurants says that we will not be able to service any orders on food delivery giants like Zomato and Swiggy, what happens is the volume gets impacted. How would you be really looking at that then?
Again, probably the same answer. Maybe it's going to happen for a day, maybe 2 days. Let's not worry about that overtly. There are more problems in India, in the Indian markets than worrying about whether Swiggy or Zomato is able to deliver food for a day or not. I don't think that's a major issue. Even if they don't, how does it make a difference to either their core business honestly, it doesn't matter at all.
Okay, so beyond the QSR space, beyond the food delivery space, of course, oil prices have rebounded in trade today. Of course, from a spike of 120, they are now back under $90 a barrel, even though still much higher than what was a month ago or so. How are you looking at this evolving situation with respect to the oil-sensitive sectors? The oil derivative companies, paints, tire companies, many other companies as well. How are you
Exactly.
looking at dealing with
Now,
that?
yeah, exactly. I mean, that is the much bigger problem. I mean, if the war situation continues, if this kind of a situation continues, we've seen a knee-jerk reaction in oil. It has cooled off, but it doesn't mean that it is that this cool off is permanent, or at least
Correct.
it's long term. The oil can keep inching back up above
Okay.
100, go to 120, 130, whatever. Now,
Okay.
in that situation, we have much bigger problems. Like you said, we have problems with anything and everything which uses crude as an input. It could be fertilizers, it could be chemical sector. Uh, you know, we use a lot of gas in cement manufacturing, in ceramics. So all of these are going to get majorly impacted overall. Other than industry, we will, we are going to have, because we are an oil importing nation, it will impact the rupee. It will impact our balance of payment. So much bigger challenges, will be around if this kind of problem persists for a month, 2 months, 3 months, 6 months. I don't know how long this is going to continue.
Okay. What is a safe zone that you've identified, Abhishek ji, for your clients at this point in time? One after the other, we've been seeing so many disruptions over the last couple of years in the markets. Sometimes it's the war, sometimes it is the geopolitical tension, sometimes it's policy uncertainty like the tariffs. There have been just an ongoing process in the last couple of years. For an average investor, this is getting extremely difficult, directionless, to understand how should one deploy the money at hand. If they were fully invested, then again they feel stuck. What exactly are you telling them at this point?
See, I think, I might be sounding a little bit, sort of mellow, but the fact is that we've actually been through a year and a half of a bear market, if I may call it that. Even though the headline indices might not suggest that, but the overall, if you talk to anybody, look at their portfolios, portfolios are down, 10, 15, 20, 30,
I agree.
right? Now, if that is the situation, what does history tell us? History tells us that whenever we've been through a protracted period of underperformance, that is followed by again a period of good performance. So that is something which I think is what we can expect, right? So last year and a half has not been good. My sense is that, and we are actually going through a lot of negativity, a lot of pain right now as well. But my sense is that we are probably, getting to a stage where the next, 2 years would be better than the last 2 years. So that's the sense. And that to an extent is being corroborated by the fact that corporate earnings growth has started picking up. So I'm just looking at the last 5 quarters of data.
Right.
And for example, PAT growth in Q3 last year was 5.8% at an aggregate level. That has gone up from 5.8 to 13.3, right? So it's, sort of 2.5 times, jump in terms of PAT growth at the overall level. So, and that has come after nearly 5 quarters of very, very tepid growth or practically no growth at all. So, very, very good growth has come in after a while. My expectation is that Q4 numbers would also be positive, would surprise us. At least it will not be as negative as people are thinking that it would be. And then it sets a base for medium to longer term outperformance of the market.
Okay. Let me also ask you on the index level per se. In the last 18 months, the kind of decline that we have seen, there are many brokerage houses that are penciling in a much higher outlook for the markets over the next 3 to 5 years or so. Therefore, looking at that, are you advising clients, investors at this point in time to double down and probably look at these levels as golden opportunities yet again? Or still do you think a slight caution needs to be prevailed looking at the current evolving situation globally? How are you advising that?
See, I mean, from a 3 to 5 year perspective, I'm very clear that we are headed, significantly upwards from here. Uh, I mean, I can't speak of an index level, but I'll be very surprised that, if we are not, way above than where we are on a 3 to 5 year time horizon. Uh, Before we go up, can we go further down? I don't know the answer to that, because
Okay.
that will depend a lot on what is happening globally, what is happening. I mean, it's just one announcement away from another, say, 1,000 points down on the Nifties. It's very difficult to
Yes.
call out on the short
Yes.
term what's going to happen.
So, but are these the best times to invest in, looking at that long-term horizon?
I would say so. I mean, you are getting an advantage of coming or last 1.5 years not doing well, corporate results getting better, maybe pessimism in the markets. If you have 100 rupees, I would not suggest you put in all 100. Maybe you do a SIP on your portfolio stocks and buy good quality companies, good businesses, stagger the buy over the next 3 to 6 months, and you will probably be smiling at the end of the year or end of 2 years.
Is there any pocket that you would still say stay clear from?
I mean, just be very wary of companies where there is a lot of narrative building, where earnings growth is very tepid. I think that is where I would suggest people to be a little bit cautious. Wherever there's earnings growth coming through, valuations are reasonable. I would not. I mean, overall, see, in the last 1.5 years, pretty much every company has been, has sort of fallen. Excluding maybe a few pockets, like gold financing and things like that, where there is been a boom. So maybe those areas are ones where you need to be a little bit cautious.
All right. Okay. Any key sectors or top of your radar right now that you are doubling down on?
I think very interesting sectors would be the entire shipping related sectors. You have manufacturing, defense. I mean, these would be my top, three picks as of now.
Okay, fantastic. All right, Abhishek ji, thank you so much then for being with us on the program. Good to be speaking with you on the show as always. And of course, we will keep getting you back to understand the evolving situation globally and the impact on the markets and the sentiments as well. Thank you so much. Appreciate your time. All right, viewers, we'll again look at the markets now, 24,163. So we are comfortable at this point in time, about 0.5% higher in trade. Sectorally, also things look much better than yesterday. Barring oil and gas and IT, rest all of the pockets are up. India VIX is also down by about 12% and that's also a big relief. It's now at 20 odd levels. When we look at of course, the pockets that are doing well, you have autos, you have banks that are doing well. Even the broader markets are showing you some uptick at this point in time. Within the big movers that you're finding at this point from the broader markets, you'll find Borosil up by 14%. You'll find Arvind Smart Spaces, Redington is up. Of course, there's a report that how India is making much bigger share of Apple iPhones rather than China, and Redington being a big distributor there. So therefore, that stock is up. McLeod Russell is higher in trade. You have, other names like even Tejas Networks, that's been consistently hovering higher in trade as well. Fertilizers and chemicals is up as well. Remember, the entire fertilizer pack was down yesterday. Today it's up and about in trade. So those are some of the names that are higher in single high digits and in double digits as well in trade. On the Nifty and on the Nifty Next 50, you will find names like Jindal Steel, ABB, Shree Cement, Tata Power, CG Power. These are the names that are still doing well at this point in time. We'll wrap it up on that note as far as What's Hot is concerned, but do stay tuned with us. We have much more action coming up on your screens. We will continue to decode for you the global impact of, for now, of course, rebounding crude oil prices, bounce back in the markets, where to find the opportunities and what strategies to follow. So stay tuned with us throughout the course of the day. Much more action coming up on your screens.